Clinker Factor, the cement industry podcast.
Welcome to the Clinker Factor, a podcast from WCA, which looks at the cement industry's response to climate change around the world and other topics of interest. I'm Ian Riley, CEO of WCA, and your host on the Clinker Factor. Today, I'm talking to Tobias Woerner, who's MD of Equity Research at Stifel. Tobias and I are planning to record a series of podcasts, perhaps quarterly, which look at the industry from an investor perspective. So we'll talk about earnings of listed companies, M&A activities, as well as other market developments. Tobias, welcome. I know you have a long history in the cement industry and are on first-name terms with many CEOs, but for those who don't know you, can you introduce yourself and how you became involved in the cement industry?
Thanks, Ian. I appreciate you having me on this podcast today. As you rightly say, I've been in the building materials side of investing for a long time, since 1996 to be exact, in finance probably since the early 90s. How did I get into this field? It was by chance. I was recruited by one of the legends in the industry, and he had to work hard to form and educate me. But here I am today, almost 30 years into the business, having looked at the industry globally across all sorts of building materials and actually construction, including obviously the heavy side building materials industry and cement.
So obviously being a right-thinking fellow, once you got into the cement industry, you didn't want to leave.
No, it is very interesting. I mean, it's not just a sort of bottom-up industry analysis, company analysis. It's also actually a macro analysis. And I, over the last, let's say, 5-6 years, really enjoyed that part, especially looking at very long-term cycles, because, you know, it may not repeat itself, but history does rhyme, and that can be very helpful in terms of investing.
Yeah, well, I hope we get on to some of those trends in a minute. Perhaps you could just give a brief introduction to Stifel first.
Yeah, I mean, Stifel has been a phenomenal company and stock over the last 3 decades or so. Have a look at it yourself in terms of share price performance. While all the other banks tanked during the GFC, Stifel continued to go from strength to strength. It is primarily a wealth manager with hundreds of billions of dollars under advisory, but it also has got a large institutional business, i.e. in equities, fixed income in the US, but also in Europe.
Right. So just looking at the recent earnings season, I noticed that a number of your commentaries noted the top line growth was quite weak, but earnings were robust. So what was that reflecting?
Well, it's basically reflecting weaker volumes. Initially, we expected that to happen in Europe and parts of the emerging market world, but it also fed through in North America, i.e. volumes there falling mid-single digit to slightly more than that. The good news was that pricing was still very strong, reasonably strong, and it didn't come off post that sort of inflation-driven spike, which allowed the price-cost spread to remain very positive and contributing favorably towards earnings. So these things did help, and clearly costs, especially electricity, have come down over the last sort of 6 to 12 months, and that helped that side of the earnings as well.
So I guess it's a little bit unusual to see volume weakness and strong prices. I wonder if that's reflecting a lag, if you like, in the response to lower costs, or whether you think that's something structural that will be persistent in the future.
So talking about history, I mean, for me, the playbook here really is the early 80s to mid-late 80s, in particular 82 to 84. Inflation went through the roof back then in the early 80s, and interest rates and mortgage rates equally to double-digit levels, high double-digit levels. And housing in the US back then, just to give you an idea, fell 60% from the early 80s to 82. But surprisingly, once Volcker got that under control, rates came down and the sector started to perform very strongly. And similar to back then, because of inflation, prices went up, and clearly costs went up too. But when he got pricing or inflation under control, then that price cost spread was maintained in a way to an extent. So it's more or less a repetition of what happened back then, maybe accentuated by what's happening today in terms of carbon pricing or the cost of carbon in Europe and the ETS, where companies under immense pressure to reduce their carbon footprint to bring the punitive effect down, which will impact those companies from here until the end of 2034, i.e., the free certificates will be phased out by then.
Right. Right. So are you seeing changes to the product mix? So an increased use of SCMs, for example?
Yeah, I mean, there's two sides to the volume recovery. The first one will be rate driven and housing driven. So the proportion of demand which comes from housing will rebound, in our view at least, from here over the next 2 to 3 years. I'm even daring to say sometimes that the US may see housing starts back above 2 million within the next sort of 3 to 5 years, and that part of the European markets which have been hit very hard, such as Germany, for example, will rebound quite significantly in terms of housing, because fundamentally housing has been underbuilt since the GFC for 17 years. And the demand in that context is there. Once the financing costs come down, they will rebound as well. And that's exactly what happened in 82 to 84. Now, the second leg to that is the decarbonization. So in theory, from a trading perspective, the whole industry should benefit from a rebound in volumes. But there's a but to this, in as far as the ETS scheme or the phasing out of free credits will put the clinker industry under pressure. Clinker is basically the process which generates most of the CO2 emissions. So in essence, the industry is now pursuing alternative materials or substitute cementitious materials, as you call them, SCMs, and trying to gain control of those while reducing their carbon footprint, in essence, the production of clinker.
Yeah, and we've seen a number of announcements on new SCM, so particularly calcined clay recently. A lot of interest there. And I think the bigger cement companies have gained control of some of the clay reserves now and are feeling comfortable about going ahead with those projects. I think in addition to the SCM trend, you're also seeing some changes or some announcements on closing down some clinker capacity.
Yes, some of the players have announced substantial clinker plant closures. They keep the grinding stations open because they can use those to mix in the SCMs. But we will hear more about this going forward from the industry from here on out into next year. So there will, in my mind, be further capacity restructuring in Europe, especially on the clinker side. And when you look forward, when carbon capture is installed across the continent over the next 5 to 15 years or so, that will also require changes to the plant networks, because basically you want to be as close to storage facilities or networks which feed into storages as you can, and the other smaller plants will probably be no longer viable in that scenario.
Yeah, so at WCA, we're currently preparing a long-range global forecast, and we see very much the same trend. So, of course, the reduction in clinker factor, but also just the overall trends in China suggest that the demand for clinker, the global demand for clinker, is going to reduce very substantially over the next 20 years or so. So we'll be publishing that forecast shortly.
Actually, on that note, if I may interrupt, Ian,
yes.
It's really intriguing because, as you know, China at the peak produced about 2.5 billion tons of cement. Let's say with a clinker factor of, what would you say, 80%, somewhere around that?
No, a bit lower than that. Low 70s, probably.
Low 70s, okay. But the point is that China is seeing a major downturn at the moment in the housing side, and volumes could fall to, if you're aggressive, and again, look back to history, i.e. Japan and or the US in 2007 until 2021, you could see those volumes fall by 40-50% or so, and by definition, that means that the carbon content will go down globally significantly, just simply because China is seeing demand go away.
Yeah, I think we can draw a parallel with Japan and even more so with Korea and Taiwan. All three countries saw a reduction to less than half of their peaks. And China, in many ways, peaked even more sharply and certainly has the potential to drop to half of its peak level. I think a lot of companies in China have been expecting 1.2 million tons a year to be perhaps the level at which it stabilizes. So I think it's not only the housing, which, as you say, has been in the news quite a lot, but it's also infrastructure. And, once you've built the ports and the airports and the railway system, you're just not going to use nearly as much cement in the future. So I think it's across the board that we're going to see those declines, and they'll be persistent for, a decade or more.
I agree with that. I mean, these things don't go away, overnight. Having looked at similar crashes over the last 100 or so years, it does take on average anywhere between 10 to 15 years. And with some cases, such as Japan and Scandinavia, or Sweden in particular, these lasted 20 years plus. So they can be quite nasty.
Yeah, and it's also in the context, of course, of what is used as a building material. So we can see there's quite a variation even in mature economies. Per capita consumption in France is about 400 kilos. In the UK is probably 200 or maybe a bit more than 200 kilos. In China at the peak, it was 1.7 tons. So even half that, it's still got a very long way to come to get down to the French level, let alone to the UK level. And I think it depends on what is used in construction. So you can see a different choice of material. When you're in China, I mean, everything is built out of concrete, but obviously that's not the case. It doesn't have to be the case in the future. So in terms of the trend towards new products, one of the things we've seen is some restructuring over several years now with some of the bigger companies, perhaps most notably Holcim with the concentration on developing the solutions and products business. Do you see that gaining more traction as a result of the carbon pressures?
So that was probably one of the more, I wouldn't call it extreme, but on the spectrum, you have probably Holcim, which is moving away from the high carbon content materials, in other words, clinker, and diversifying into solutions and products, particularly commercial roofing, but also residential roofing and mortars and other things. And on the other side of the spectrum, you've got somebody like Heidelberg Materials who sticks with its core business, the heavy side, but tries to decarbonize that on a bottom-up basis or strategy with a bottom-up approach and pursuing sort of the CCS angle as one of the leaders in that space. Now, Holcim does that too. It's got 6 projects meanwhile, and both companies or the industry, in particular the larger companies, are benefiting from the EU's innovation funds here or other funds, subsidies, which are helping them to digest the significant capex required for that.
Yeah, yeah. And I guess the other trend we've seen over several years now has been, certainly with Holcim, but I think with other majors as well, a tendency to focus on developed markets and to divest their operations in emerging markets. I see recently Cemex announced divestment in the Philippines, which is very much part of that trend. Is that something that you expect to continue?
We do expect that to continue, maybe not to that extent, and it depends on your respective market positions, i.e. whether they're strong or whether they are sort of weak, in other words, or smaller market shares, and your regional positions as well. But yes, we would expect more to come from the industry here, in particular, probably in countries where China is strong, parts of Africa and parts of Asia.
And maybe just winding up with a look at what's going on in the UK. We have a new government who seem to be saying all of the right things. Have talked, have promised 1.5 million homes in this parliament, which will be quite an achievement if it's successful. Have you got any thoughts on what we can expect in the UK?
You probably saw Keir Starmer, or Sir Keir Starmer, I should better say, talk to the country yesterday and warning them of the hard times ahead in near term, but that is the investment required to have better years ahead. I think the key thing here for the country is that it needs to maintain fiscal responsibility. In other words, that what we're seeing now in terms of political stability is being delivered also from a fiscal credibility point of view. And that should allow the bond yields to come down, or the spread versus the German bond yield, and hence drive the investment back into the UK after many years of uncertainty, volatility, political instability. Political stability is the first thing, but really it's now the delivery around fiscal prudence.
Right. Well, we will have an autumn statement shortly, and perhaps next time we talk, we can look back on that, Tobias. So, Tobias, thank you for joining me today for the first of ours, where I look forward to doing this again in a few months' time, 3 months' time.
Sure, same here.
Wish you well.
Thank you, and you. And if any of the listeners want to reach out to us here at Stifel or myself, we've actually got in the building materials space quite a sizable team here in Europe, covering not just the heavy side, but also the light side and construction infrastructure. We also have quite a sizable team in the US covering these areas too, both as equity analysts and also as part of our investment bank. But in any case, thank you very much, Ian, for having me on this podcast.
So, Tobias, we'll put the relevant contact details in the show notes, and then any listeners who want to get in touch will have the details to do so.
Thank you.
Thanks for listening to the Clinker Factor podcast today. If you've enjoyed it, do subscribe, and please recommend us to friends and colleagues and anyone else who you think would be interested in what's happening in the cement and concrete industry around the world. WCA is a not-for-profit company. Please visit our website to see the services that we offer